Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Andy Baehr, Managing Director at CoinDesk Indices. We have Pandl, Head of Research at Grayscale, and Tim Ogilvie, Head of Institutional at Kraken. We're here to discuss crypto catharsis, expectations for ETH ETPs, and the impact of the election on digital assets. It is great to see everyone, as always. Welcome back to Market Site. And Andy, you're calling it here crypto catharsis. It feels very different than the last time we saw you in June. The landscape has certainly changed.
For sure. It was just under 3 weeks ago that the fateful presidential debate turned the course and the narrative around the election. I think that started a feeling of momentum. The prediction markets were certainly predicting a different outcome after that debate, but there was still the overhang of distributions from Mt. Gox and from the regulators who had seized Bitcoin, which was keeping the market kind of tamped down. The sort of regrettable and hard to understand or comprehend assassination attempt last weekend just kind of popped the cap on all of that, and it feels like there's a very it feels to us a little bit like an emotionally driven, a very spiritually driven rally in Bitcoin. The Bitcoin community seems to be rallying around this idea of change and this idea of sort of independence that is kind of parallel with what's going on in current events.
Yeah, that is interesting. And Zach, who would have thought that perhaps bipartisan support around something like crypto would have brought both sides to the table here, and it really wasn't part of the national vernacular, in the beginning of the year?
Well, I think we've gotten there because the public likes Bitcoin and the idea of decentralized applications on the internet. And so, the parties are embracing it because the American public has embraced it. And I would add, on top of the political stuff, on top of some of the flow drivers, I think the macroeconomic picture has favored Bitcoin here as well. We've had a couple of low inflation reports in the US, which is giving the Federal Reserve room to cut interest rates. Bitcoin, at the end of the day, is a money system that competes with the dollar. And so Fed rate cuts tend to weaken the dollar, supportive for Bitcoin. So all of these things coming together have given us the big rebound in price.
Right. And Tim, from an institutional perspective, how has interest moved in the past 6 months? How is it differing from what you're seeing in retail?
Well, I think what institutions are looking for is clarity around where they can do business. Can they transact in Bitcoin, Ethereum, other digital assets? And as you move towards more clarity, whether it's the ETH ETF, whether it's a path towards some regulatory clarity in the US that hasn't been here with the administration, you're seeing a lot more people position themselves with a little more risk and an eye towards digital assets have a clear future that they can take advantage of.
Right. And Andy, let's talk about the ETH ETF for a moment here and expectations for the launch. And also to Tim's point, it feels as if getting that regulatory clarity, that is almost as big of a catalyst as new product coming online. So two questions here. What are your expectations for the ETH ETF? And then, around that, what will a framework do to continue to advance the industry?
It's another big step. It's a momentous step. Ether has a very different investment case from Bitcoin, and hopefully, I think, everybody at this table and many others are doing a good job to help people understand the difference between the two and the expectation set that they should have as the sort of execution house and clearing house for tokenization, for stable coins, for smart contracts. You have this kind of platform which really represents a lot of growth, and a monetary token which has to pay for all that stuff. So it's a very clear kind of currency commodity type structure that people should understand. It's currently a zero inflation product, right? There's as much destroyed as part of the algorithm as created to reward validators. So it has a lot of really great properties. It's interesting that in the 3 months before the Bitcoin ETFs launched, Bitcoin had appreciated 72%. Ether up until last week was kind of flat, right? And has only kind of rallied up with Bitcoin in the last couple of days. So there's going to be less surprise, I think. There's going to be less sort of checking in the middle of the night to see ETF flows. I think people understand that the distribution paths are starting to build in. And we just hope that this is the beginning of a opportunity for diversification for digital asset investors.
Right, and certainly getting a more constructive framework around it will allow the industry to advance and build that market structure out for all types of products.
Absolutely, and that's the kind of thing we're doing at Grayscale. I'm incredibly excited to see these Ethereum products reach the market. I think most people that work in crypto have a similar story where you learn about Bitcoin and get excited about a digital money system with no central authority, but it's really Ethereum and smart contracts that convince you of all the possible applications of public blockchain technology. And so we did a education process around the Bitcoin products for a much wider range of investors that had touched these products previously. I think we're going to do the same with Ethereum, and it's just exciting, I think, to introduce the technology to a huge audience. I think these products will be very successful, just like the Bitcoin products were earlier this year.
Do you expect the same impact on the market?
I'm really interested to see what inflows look like. I think the line for us probably feels like $750 million to $1 billion in inflows monthly is kind of, if you're well below that, kind of probably hasn't met expectations. Above that, I think all bets are off in terms of you got a ton of activity into it.
Right. Well, especially it's another way to diversify as well, right? Your only option wouldn't be just Bitcoin.
You had a Bitcoin story. I think the question and the real thing we're watching is what is the thesis investors are attaching themselves to for the ETH ETF, and to the extent it talks about the sort of decentralized computer that can do a wide swath of new things. That's a really interesting thesis that if people are picking up on it, I think bodes really well for the category. But it's an unproven one, and so I'm very interested in what inflows look like.
My guess is it's going to be a finance-led story. Decentralized finance, stable coins, tokenization, these are tangible things and active products that a lot of institutions are involved with. I think people will understand that financial use case for Ethereum best more than some of the other things that it can do today.
Yeah, I mean, that's a good point because there is that institutional familiarity around it.
Absolutely, and not only on the investment side, I just love the liquidity side, right? Markets, especially constrained markets like the United States where you can trade spot, you can trade futures, you can trade ETFs, that just brings in more people keeping prices honest and brings in more volume. The United States will be able to contribute more to the global volume in Ether this way, even if we don't have access to things like perpetual futures and offshore exchanges and things like that. So more volume will beget healthier markets, draw in more participants, and I think that really is something that we need, as well as ETF inflows by advisors and individuals.
Zach, what about crypto and AI synergies?
Well, it's a huge topic, and Grayscale today launched a new product related to decentralized AI. Look, we are incredibly excited about AI technology, large language models. In my own research work, I'm using these tools every day, all day long. It's sort of amazing how quickly it became part of my workflow. The challenge is that these tools bring certain risks and certain downsides, and our view is that public blockchain technology can help mitigate some of those risks or balance out some of the problems from centralized AI. Examples are scarcity of GPU computing can be maybe shared over a network. Open source models, it's easy to finance these large models inside a big corporation, but how do you incentivize the development of open source AI models? Public blockchain technology is the kind of mechanism that can help do that. And so we believe that there's a sort of suite of tokens, suite of protocols with associated tokens within crypto that can give investors exposure to those types of theses. And so we've created a product for accredited investors doing just that.
Right, well, and you also have the transparency aspect of it as well. I mean, institutions understand that, right? Custody, transparency, accountability, traceability. So to everyone's point at the table here, it's something that is more easily understood. And then you think about it, if it really does become a technology, blockchain, market structure kind of story, where else can these kinds of products be indexed, or what can they index off of, that is not specific just to AI or the underlying infrastructure of the digital asset ecosystem? You're looking at other areas that are also more generally understood.
And those indexes, as much as we love indexing everything that walks or doesn't walk, right? They have to be standardized. I think that Grayscale does a great job of identifying and really researching topics well and coming out with super products. The indices that are like doing the best for us this year are the ones that are just getting a ton of liquidity. Like CoinDesk 20's traded $6 billion now in perps, and that's totally unprecedented. It's meeting demand for ways for institutions now, sort of crypto native trading participants, to move big 20 tokens in and out of their portfolio very quickly. So that kind of almost QQQ-like use of an index as a liquidity engine is going to help provide liquidity to fundamentally based products, and again, give investors what they're ultimately really going to need, which is diversification benefit. if everything moves the same direction at the same speed in the whole digital asset class, then it's of less ultimate use than if we really make it something where you can actually achieve.
Which is why you want uniformity, because once you start developing derivatives off those indexes, now you're talking about a hedging mechanism for institutional portfolio managers.
Yeah, and you can use it in the variety of ways that traditional investors are used to. They are used to having a full suite of tools in terms of spot derivatives that they can use to take on a position. You need to have that, and it's nice to see that getting established here.
Yeah, I mean, think about it, covered call ETFs on the underlying spot.
Yep.
I mean, this is institutional, and I don't want to say plain vanilla as it gets, but now you're kind of in the world of traditional issuers.
You are, but that's already a nuanced outcome, right? You're thinking, I believe in this asset, I want to hold it, but I also recognize that the options market is going to pay me a giant premium with a risk premium embedded to be able to sell away upside. So, this is one of these conversations, and digital asset people, I know we've all had this, where you're trying to have a meeting to bring someone into the fold, and you can really only explain one thing at a time, right? You're not going to prove two things in the same meeting. So, getting someone to do a covered call on equities or an equity index, that's your one thing you've spent it, right? So covered calls on crypto might be two things, right? So we need enough people who are super comfortable with Bitcoin and Ether in ETF form and other index products, so that when the covered call idea comes, they go, oh, okay, fine. I'm already comfortable with this. I can get a giant yield on top of it. Fantastic. So we will be ready, hopefully, with ways to implement things like that. And by that time, I think people will at least be comfortable enough with Bitcoin and Ether that they'll be ready to take that second step for an outcome-oriented product.
If I could make one other comment on this, I mean, to me, this is part of what the investment thesis in these assets is today. In 20 years' time, we're not going to say crypto and blockchain. We're just going to say financial markets, and these things will be ubiquitous in parts of the core parts of the financial system, fully developed, all the kinds of liquid derivatives. But at that time, the return profile of the assets is probably going to be lower than what it is today. So for investors getting involved today, that's what you're going for. It's a young asset class that is rapidly developing, adding new products and features. And by investing in these tokens, you're capturing that growth. And so I think while the fact that we're seeing all these developments is just reason for investors to be involved today. Yeah. Don't wait for these markets to be fully developed in 20 years' time.
Right. Well, I mean, anytime you scale something, it's always going to, the economics of it are going to change. But it's so interesting. We have investors that are really driving demand for alternative investments. They are looking how to get in on an angel round, A round of the next NVIDIA. Well, this is kind of your opportunity, assuming that thesis is right in 20 years, that you can get in now, before it is more scalable, for lack of a better term.
Yeah, absolutely. I think that most investors should think of crypto as part of their sort of alternatives bucket. These are liquid alternatives with a low correlation to public market equities. It's hard to find things with a low correlation to stocks. And so it's, as Andy was saying, an excellent portfolio diversifier, and in our view, quite appropriate for the vast majority of investors. Of course, speak to your financial advisor and do your own research before making any decisions.
Of course. I'm sorry, go ahead.
I was just going to say, I'm interested in how it will develop also. I mean, these initial ETH ETFs exclude staking specifically. Staking is a very unique aspect of Ethereum, which adds a yield attached to the Ethereum in the form of new rewards. And that will be a new item for investors to grapple with and I think get their arms around and figure out how that should be built into a new portfolio.
So the function of the ETH ETF will look different than the Bitcoin ETF because of that property? So
initially it will not. Initially they're excluding staking from the ETH ETF, but Hester Peirce this morning, the SEC, largely the commissioner who's responsible on the Republican side, is suggesting that if you had a change in administration, they would look at staking as a new issue and potentially include it in ETH ETFs.
It's a fascinating topic because not only does it actually just provide if you're already in Ether, then staking yield is risk-free, is a risk-free rate, right? Because you're already banking, you're already trusting the network, and the network is generating this reward. It also brings people a little bit closer to the consensus process of how digital assets work, right? It's hard for people outside of buying equities, certain equities, to participate in Bitcoin mining directly. But when you're participating in staking, you're providing security to the network and getting rewarded for it while still owning the token of that network. It helps just enrich the story a little bit. It certainly helps make the economics a little bit more interesting. There are complexities about ETF liquidity and staking liquidity which have to sort of be worked out, but if nothing else, we love structuring things, so that can be conquered, and it has been conquered in other countries. So, and there's some interesting innovation on that topic as well. So I agree. I think that will be an enriching process. Hopefully, that will be added to a large user base of Ether ETF owners in the near future.
So it would be almost a high yield product as well as an alternative investment product.
A modest yield
Okay,
product.
right.
Call it 4% annually in incremental Ethereum.
Right. Well, I mean, that's not bad of a yield, right? Relative to
incremental total returns, absolutely.
Right.
And I think, as Andy was saying, stakers have a responsibility to validate the blockchain. They're getting rewarded for a service of maintaining the technology. It doesn't work without the function of stakers. And so I think it's exciting both from the standpoint of total return to investors, as well as educating people about how this stuff actually
I mean, that's a whole new portfolio manager. The function, the role is certainly going to evolve.
Yes, and I think that,
exactly.
And I would say that the ETH products will not include staking at first, and that may be appropriate in the sense that staking is a function, running a validator, checking transactions, participating in the algorithm that runs Ethereum in various ways, and so we'll get there eventually, I think, for these products, but it won't have it on day one. I still think these products are going to be a great fit for a lot of investors.
So speaking of day one, the assumption is more near term.
Yes, we are very optimistic that these products will be trading in the relatively near future.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.